Okay, we should be live. Good evening, everyone. And hello to the duck. I think it's been a while since we've done a joint session. It's actually
Yeah,
been
it's
a
been
really long time,
like 3 weeks or something.
at least. Do you want to say some other stuff so the audience can tell us about our audio levels and whether they're somewhat balanced?
I mean,
Just give us
that's
your
you're
Tinder
putting
bio into the microphone.
you're putting me on the spot here. But no, should be fine, I think. But chat will let us know.
Audio all good. Nice. We won. Finally. Okay, cool. Well, thank you for hanging out with us. Can't speak English already. This is a great start. On Casual Friday, we've got some stuff to talk about which may be less casual in nature. We actually had back and forth DMs trying to discuss what to even talk about, given we're not very good at shitcoins. But we'll come to that as well. First things first, hit the like button on the video if you haven't already. Your support is very much appreciated. Second of all, thank you to Bybit for sponsoring Technical Roundup. They do nice stuff for us, so we can do nice stuff to you. Which sounds really weird, but it works. There's a very well-established chain of causation there, or something. I lost the script, Don. I don't know what to say. Also, on that note, there is a link in the description, which is to visit Bybit. They've got some pretty weird but seemingly cool thing going on, whereby you type in literally this code into the voucher box in the giveaway hub, and then just by trading, you're eligible for, like, they're doing 1 Bitcoin prizes or something. I mean, let's be honest, given it's Casual Friday, Duck, normally whenever exchanges do some sort of like competition giveaway thing, it's the most cringe thing in the world, right? Where you have to like jump through 10 hoops, rescue 10 babies from like a burning building, and then shake the president's hand, and then maybe you'll win some dust, right? Whereas actually, for the first time in my life, took some real effort to look into the exact steps for this one, and it's you type in the code and you get liquidated on a trade. You just have to do one trade before a deadline, and then maybe you'll get a Bitcoin back, so you can lose that on another exchange. So there's my due diligence and research executed. So yeah, that link's in the description. Go click it, check them out. Give us some proof that it's not just my Russian friends watching the channel, but with every month there are just more and more questions and more stressful meetings, so I don't know how long the charade can go on for. What are your thoughts, Don?
No, I think we're doing kind of okay. Like, I mean, it's only like 7K bots and like 2K people now, so it's getting better.
Yeah. We've been reinvesting the money into more convincing robots. I think it's been working. But wait, are we live? As the title suggests, there is some technical stuff to talk about, and it's not like a clickbait title per se, but maybe I'm going to use the word provocative to get away from being called a clickbaiter. But there is a technical argument to be made, perhaps an uncomfortable reality to face, at least in the short term, that one could reasonably expect a lot of bearish retests to play out in the coming week with where the market is right now, right? So you had a big nuke week. I personally, from my Twitter, not that it means anything, I didn't get the feeling that there were a ton of my learned friends and colleagues, etc., that kind of caught that move. It seemed one of those pants down scenarios, or at least certainly the magnitude of it. Do you have a similar sort of feeling?
The 12K to like 10K move.
Yeah, just the weekly count. Yeah, the last.
Yeah, I mean, are you trying to flatter me? Because I did.
Yeah, I mean, obviously you did, but I mean, a lot of the time with really big moves, I generally see much more cohesion, I suppose. Whereas in this case, it's like, well, mid 10K just got trashed, and what do we do? You know?
I mean, it was kind of out of the blue, right? Where we had this, like, ETH looked really strong, and then you had Bitcoin just slowly following along.
Mm-hmm.
But yeah, I guess like these kind of tops, like the surprising thing is, like you said, like barely anyone talked about like the possibility of a head and shoulders, for example, which is like the usual thing that you see all over the place, right? Whenever like you have this head and shoulders pattern, like on like the daily right now, everyone keeps talking about it. In this case, no one talked about it. So not surprised that it played out, because when you see these patterns, like these big patterns, like head and shoulders or like rising wedges or whatever, if everyone keeps talking about them, they barely play out. But
do you want to bring it up on your screen share? Let's talk about that daily pattern.
Sure, yeah. Give me a second. that should. Okay, I should be showing what's going on.
Bro, what are those midgets? Is that? No, I'm joking. It's the right screen. Don't worry.
Oh, yeah, almost.
Almost,
no,
yeah.
but like in this case, right? And I can remove these lines for a second to make it a little bit cleaner. Like you have this very neat. I mean, people are gonna call me out saying, "Oh, volume profile doesn't fit." Whatever. I don't really care.
Yeah.
But you had this really neat like head and shoulder setup, right? Where you have like a low, high, or like a high in general that gets taken out, and then you retest the first high.
Mm-hmm.
And yeah, whenever you have these clean patterns and everyone keeps talking about them, what you usually get is something either you break down and then immediately go back up, or you don't break out, like you don't break down at all. For example, the head and shoulders in ETH.
Did Peter Brand tweet one of them, or am I forgetting?
Peter Brand actually tweeted after the entire move had played out.
Nice.
But I saw a lot of people talk about this setup before we actually went up. Like this head and shoulders was talked about a lot, and then this happens, right, where you get just completely obliterated. In this case, not that many people saw this. Chim Su actually, and he's gonna be a guest at some point, I think. Alerted me. I was like, dude, this is cooked.
I really feel like we're a shitcoin dev team from time to time, Don, because we just keep saying it's all the guests are coming in the future next week. You know, look at our roadmap of guests, and then every week it's just either me or you or someone bails on us. Feels bad, man. We've got to deliver on some promises for a change. You know.
I mean, I call Gainsy out on that one. Yeah. Gainsy's fault. Because he keeps saying, I'm going to be on. Then we don't look for guests because Gainsy's going to be on. Yes. And then he's not. So
yeah, too busy looking at boats instead of getting a $5 mic from Walmart or whatever it is.
Yeah. But yeah, back to the point, like whenever you see these patterns and everyone keeps writing about them, be a little bit more cautious. And if you don't see anyone writing about them, and this is the same thing that we had back in here, right? Like I said, oh, this is an inverse head and shoulders pattern in here. And barely anyone wanted to talk about it because this looked so bearish. Same deal up here. It's just how these things play out, in my opinion anyway.
You made a really funny point. Again, I'm always going to be dragging this to Casual Friday because God help me, I woke up from a nap like an hour ago. You know the volume profile critique? And for those unfamiliar, there's this thing where a certain, like there's a criticism of a lot of chart patterns that people might tweet out as ideas or whatever else. And that criticism basically says, well, yeah, the pattern kind of structurally looks like whatever, head and shoulders in this case, but the volume profile doesn't match with how it should be, like, you know, the left shoulder this, and then relative to the neck, relative to the right shoulder, etc. The thing is, first of all, no one really cares, right? Like, it really doesn't make a difference. It's like one of those distinctions without a difference. But perhaps most practically, the thing that makes me kind of chuckle always, can you imagine, like, do you really think there are people who exist who will have those daily, like, candle volume bars at the bottom, and they see the pattern, and they, like, start measuring and be like, oh, no, you know, it looks really bearish, but, like, the volume profile doesn't match up, so I'm not going to sell that. Like, I can't fathom that being, like, a large number of people, right?
I don't think so either. Even more so, like, in traditional markets, I could see, like, the traditional market people, they're even more crazy, I'd say, than we are, in the sense that they just have this like stupid patience, even more than I do, where they're just like, okay, waiting for everything to be perfect. In crypto, nothing's perfect ever.
Right.
Like you don't get the perfect bottoms, you don't get the perfect tops.
Retest, anything.
Yeah, it's just barely, like sometimes it does work out. Like sometimes you get a really beautiful top. Like, I mean, I'd say this is a really nice looking top. But I mean, you can't really expect it because you get shit like this where you just nuke to pretty much almost zero on like an exchange, and everyone shits their pants, including me. And then you get like crazy moves to the upside, and just if you have too strict rules, I think you're giving away a lot of stuff that you don't have to.
You say shit your pants, like, dude, I remember that. You know, it's one of those things where we always meme to some extent, or there's like,
Yeah.
half jokingly how, oh, well, in crypto you live through this many market cycles in this much shorter period of time, etc. I feel that's been true emotionally, certainly, right? Like, well, you can discuss the price differences and market cycle nuances, whatever, but certainly emotionally feels like it. Like, I remember buying like some spot at 4,800, and then by the time Coinbase successful, and then I tweet out like I bought some spot, literally blink, and we're like down another $1,000, and I'm like,
Yeah.
okay, well, if this goes to zero, I guess there's a whole lot of people going down with me, sort of thing.
Yeah.
But after that, all these crazy big drops, big candles, like my levels getting smashed, anything that really transpires, I'm just not impressed, kind of. Do you know what I mean? It's like, well, it went further than I thought, but that's it. But really, that March crash is when I was like, okay, this has just nuked my entry by like 1,000. I don't even know what to what to think at this point,
Yeah, I mean, I felt the same way. Like, I bought 4K, right?
Yeah.
And went on stream. Like, I bought and I was like, okay, I'm just not gonna like have anything open, so I can't do anything stupid, right? Because sometimes you buy something and you know exactly that that's a good price to buy it at.
Sure.
And then something crazy happens, like, holy shit, I need to get out or something, right? I mean, it very rarely happens to me, but I mean, I was like, at that point, I was like, okay, shit, just gonna distract myself with a stream. And then I opened up the stream, and literally, I mean, you can see what happened straight after I opened the stream, and straight after buying, pretty much, is like, I bought here, right?
Yeah.
And I was like, this is a pretty nice thing, right? But got pretty much a very, very low entry here. And then it literally just the next candle was just pretty much the same thing as it started, like from 6K down to 4K, and then you got from 4K down to like almost
you were the
3K.
sandwich in like you were the meat in a bearish sandwich in that case.
Yeah.
You get some pretty rough stuff.
Yeah, and then I was just like, okay, I mean, shit happens, it's just gonna hold through, and
I think
it
it's
did
an
bounce.
understated point. Like, how your entry makes you feel, more often than not, will have a meaningful, in my experience, impact. Even though it shouldn't, it'll have a meaningful impact on how you manage the trade, right?
Yeah.
And that's
100%.
something which you should generally, for the most part, I think, try to minimize, right? Or at least be conscious of, that you should manage the position as it is, like, whatever, for the trade that it is, rather than how it made you feel or what happened slightly before, slightly after. But like, I mean, I know this is your experience with some of those low buys. I get the same thing as well. When you really had like a teeth gritting, grinding, whatever type of entry, if especially, even if it starts going your way, you're almost looking for excuses to get out of that position. Right?
Yeah.
Like, oh, well, I survived that bazooka, so, maybe there'll be like an easier trade down the line, so I almost want to offload this to someone else.
I mean, I'd say that is kind of what happened to me, right? So I'd say like the biggest mistake that I made this year was getting rid of that position relatively early into the rally. And I mean, I think, mostly psychological. And usually doesn't happen to me. I've sat through a lot of crashes in my time with Bitcoin and altcoins, but that crash was something else. Like, this, I don't think has, like, at least not in my time in crypto, has ever happened before. We were so close to zero that, I mean, I don't think most people realize how close to zero we were at that day. On BitMEX, there was really not that much difference between zero and that price. So that shook me, and I closed way too early. But it is what it is, right? You live and learn. I mean, in the end, there's always the next trade, right? So.
Speaking of which, to somewhat pivot back to the title a little bit, which is, what is the case, if any, to be at least aware of some sort of bearish retests or rallies being sold into, or some sort of difficulty taking place next week, like either on the weekly time frame, daily time frame, etc. Like, my weekly time frame is a bit scuffed. I have a number of like reasonable things that I could see, but the levels are all slightly different. One of them makes it look like it's a bullish close. The other one is like, well, you get a bearish retest. So, this exact area isn't where I'd want to dive in to do business. Normally, whenever I have like doubts as to what is the level that I should be using for bias or for trades, etc., especially when they're not close enough that I can box them together, but also not distant enough to trade level from level. Do you know what I mean? That like really uncomfortable distance between levels where you can't box them out, but they're also not close, not far enough to have A to B. And I'm like, oh, well, I guess I'll just have to see, right? But as you'll recall, and hopefully the viewers will as well, mid 10K was the kind of mythical bullish retest kind of market structure, broken, etc., level, right? Whether it's the wicks, the bodies, that lowest close from like September, you know, the one I'm probably referring to, that's where your like green line starts, just that whole candle. However you want to define this area, it was reasonable consensus that like, you know, this is our key support, and then if it's broken, that's bad, but if it holds, that should take us to like 14K, 20K, etc., right? Now, I think what the difficulty with where the market is right now is, I mean, yeah, you could just be prepared for some heat or discomfort or whatever and just think that 10 is like a good average and punt, and depending on your strategy, maybe without leverage, etc. But like speaking purely technicals, it's pretty hard to distinguish whether the last weekly close, is that like a break and bearish retest of this magical mid 10K level, or is it just crypto doing crypto things and spiking uncomfortably deep into levels and areas before ultimately doing the obvious thing? So do you want to kind of run us through at least your interpretation?
Yeah, I mean, for me, what I usually try to do in these cases is I've had this chart marked out like this before we actually broke out to the upside, right? And I've had that marked out for a reason. So before it actually broke out to the bullish side, I was like, okay, these levels make the most sense. The reason why I got these three levels is, one, this is the bottom of the range here, right? That we broke off like down from, and then retested twice before going like very low. Retested again here, so it's definitely like an important area, right? So this level, pretty obvious why it's there, and that's still support. And then the 10.5 level, the reason why I have that and not like something like this, which would still, I think that's still fine actually, just based on the fact that, I mean, if you have this support down here,
it's the opposite.
Makes sense to have has sense to have the opposite side of it marked out as well. So completely fine with that as well. But generally speaking, why I have like 10.5 is because that's pretty much what stopped every single rally until we actually broke out. And it's kind of that level that I wanted to see hold if we were to have like some more upside. Reason being why I wanted that to hold is because it's the level furthest up on the chart. Like if you see, like if you box out these down here or whatever, it starts to get really uncomfortably close to like a breakback, like a breakout into a breakback into the range, right? Because something that I usually don't like to see when you have a range breakout is it go back into the range, right? And if you're like, okay, this might not be like the breakdown, whatever, and then just start boxing lower and lower, you're at risk pretty much of saying, okay, we're at support in here, back in the range where we already failed the breakout, and I don't want to be that guy. And in general, if you think about it, right, whenever you have a breakout and you go up and then immediately retest like this kind of stuff, like if you wick down and retest like that, that's fine to do. But if you immediately retest after a breakout, that's usually a sign that maybe, or like at least the first warning sign for me, where I'm like, okay, this breakout might not be genuine, because usually when you get like this kind of massive breakout, you get follow through, right? And in this case, we didn't have that, and also failed the first support level. You can obviously say we're still at support, and I mean, I'm completely fine with that view, right? If you're like saying, okay, this is support, and I mean, it's obvious that a lot of people think that way because there's some buying at 10K, quite excessive buying. Like the defense of 10K has been impressive in my opinion. So a lot of people think that this is support. For me, I mean, it is support, yes, but we also have resistance at 10.6. And until that is kind of like invalidated, I think we just had like a structural breakdown because we've broken out of this range here to the upside, broke back down. And I planned with this move quite a while ago, didn't play it perfectly, but kind of had this game plan where I was like, okay, if we break out, I'm going to expect that to be a fake breakout because I don't think we're ready for like 14, 15, 16, 17K yet. That turned out to be true. Let's see. I'm not entirely sure if the rest of my plan is going to play out, which is kind of like we're going to retest 10.6 and then start heading lower into like the 8K area. I don't know if that's going to play out, but the first leg's already been pretty nice, and I'm going to be invalidated on my plan. If we start closing back above 10.6, that would get me worried for my shorts, and I don't know, 11.5 would completely invalidate it, but I would probably
be out
already
then, right?
Yeah,
I
don't think I'm gonna.
The question, if we, this kind of not super technical discussion per se, but like, oh well, there's a level here, there's this one, there's the wick. This could be support, but like for me, there's resistance here. Someone listening to this and might think, okay, fucking hell, I just want to get long this thing, get the swing long for the high time frame move, breakout, retest, etc. In your view, and again, I don't have like a fantastic answer to this, given this area is still pretty technically cluttered, and I generally find whenever there's like a failed breakout scenario on a higher time frame, it sometimes just gets a bit sloppy if you're just retesting different stuff at the same time. But generally, how would you answer the question as to if I'm let's say a larger time frame trader or whatever else, I don't care about the specific nuances or the precise levels, etc. Where is, price can dip slightly lower, dip slightly higher, whatever. Where is the higher probability trend continuation long? If you may be spooked by this weekly, as in the last weekly close, and you're kind of don't want to be the hero or catch the knife or whatever you want to call it, do you have in mind, even if it's not something you trade strictly because you'd be invalidated and flipping is a whole different beast, but for you on the table, at least conceptually, where is the continuation long that's lower risk?
I think it depends on what you're expecting, right? Like I said, I wasn't expecting Bitcoin to kind of break out and start rallying hard, just because I didn't really see the kind of retail support, whatever. I didn't really see a lot of new people come in, and the hype didn't pick up for me, at least. That's what I saw, right? But if you're in a different camp and you're like, this is institutional buying and the retail people are going to come in relatively soonish, I think that's an excellent buy, like support to buy like 9.7, 9.8. Maybe if you're like waiting for a wick down to 9.6.
Yeah.
If you're expecting it to go to like 14, 15, 16K straight off the bat, I think that's the place to look for buys. Because if this support doesn't hold, right, 9.7, and I've made this case for a while that I'm expecting just a giant range to form in here.
Yeah.
And that it's just going to go up, down, up, down, up, down, and you're going to get sick of it. And then at one point, when no one expected, it's just going to mega rally, right? That's kind of my expectation for this thing. And from that expectation, I kind of make my plan for how I'm going to trade support resistance levels, right? Because if I was expecting this to go to 15, 16, 70K from here, then I would say, okay, this is the most obvious support to buy, and then I would buy the support. In my case, I'm looking for like this ranging market. That's why I'm looking for like 876, and then just back up and back down and back up, back down until that stops working, right? Yeah. And for me, that's worked really well in the past, but that's obviously gonna fail at some point, right? I'm gonna be wrong at least once, or change my mind. I mean, that works.
No, we're not allowed to do that. Come on. It has to be the cult double down. See, that's very interesting, and certainly it's, totally different, conceptually to how a lot of people, myself included, look at these structures, where in your case, it seems to some extent, again, correct me if I'm caricaturing your view or whatever, that your kind of valuation or actions you take at a level are at least somewhat based or contextualized by your future expectations for the market. Right, it's not like an all levels are made equal sort of thing. The level either has a lot of strength or a lot of, or the absence of strength based on your future context or expectation of the next kind of, I suppose, higher time frame environment. Is that roughly correct?
That's completely correct. I mean, it doesn't really. I think if you take it all out, like your entire view on the market, then you'd probably be better off just coding like a bot, coding an algo or something. Put it all in and then just let it trade. Because I think the best kind of part about one of the big parts that you have to have in this market is like being kind of like being able to see changes that happen in like the short term, or like in general, like seeing changes in behavior in the market, where you're like, okay, these kind of like, we've had dip buying at these and these points usually, and now it stopped working, right? Or you have like a strong rally where you get like this kind of structure, right? It just keeps on grinding up, uses the high as support every time, and then you start seeing like a breakout of that, and it goes back and breaks a low or something. When you see that kind of stuff and it changes in behavior, you kind of have to adapt to that, right? If you're trading the lower time frames anyway. For me, nothing, like not that much has changed. But if you're trading lower time frames, you have to kind of adapt to a lot of stuff. And I don't think that algos, like if you're not a really, really good algo kind of developer or whatever, I don't think they do it that well in comparison to a human, as long as the human actually like knows what they're doing.
Yeah.
So for me, obviously, like when or like in general, even more so with like my view on the market, that that makes my choices relatively easy. Like whenever I'm like, okay, the market looks like this, I'm expecting it to do this, so I'm gonna play this and this support or resistance this and this way. And I think that makes sense. I mean, it's just the thing that makes the most sense to me, right? If you have a view on the market, and I think everyone that has been kind of trading the market has a view on the market. And if that view has been accurate in the past, and for me that's been the case, then why not use it, right? You'd kind of be wasting the potential that you have in just being purely technical by just saying, okay, I'm just going to ignore everything that like my entire thought on the market and just trade the levels, which work as well. Like I know people that just blindly trade the levels.
Yeah.
And that can be an advantage too, right? For me, there's a little bit more to it, but
yeah, I almost feel like, I mean, it's a very interesting point. I mean, I agree, and I think what you were getting at, if I can attempt to kind of conceptualize it, is you're almost performing a disservice to your screen time by ignoring those smaller things that might jump out on you or be intuitive based on like thousands and thousands of hours, and just by being a purely technical guy, which, being realistic, certainly just to get the bloody levels on the chart, etc., you could kind of teach someone in an afternoon. Maybe not how to trade them or the specific management nuances, etc., but the kind of technical roadmap, you can really, it doesn't take long to get the right areas on the chart. Is that generally your understanding?
Yeah,
because that's how I feel about it.
I completely agree.
Like, you know, you can teach someone in one afternoon how to, you know, get the monthlies, get the weeklies, get the dailies, and then price will kind of ping pong vaguely off of these areas. Now, you know, that doesn't mean you're profitable. If anything, that's like the first thing you learn when you go through any technical analysis stuff, is kind of mapping the market or whatever. But it's very clear that that in itself isn't enough.
It's not enough.
Of course not. There's a good question. Also, guys, feel free to ask us, and girls, ask us questions while we're rambling on. Danny says, what parameters did you use to make that assessment in terms of the price being ready to ascend higher? That's the point you were making about you just didn't feel like the 13, 14, 15k continuation was plausible. So like the question there is, you know, what parameters did you use? Or is it like a gut feeling? Is it your macro understanding of like we're still in the range, still proven otherwise? Like, you know, how do you make that assessment? Because you're kind of expecting a failed breakout at that point, which isn't always easy to do, certainly in a non-technical context.
Yeah, for me, it was kind of like, I mean, with like having a Twitter profile, it's relatively easy to judge how much kind of new people are coming in, right? I mean, that's one of the big advantages that we have as like having like Twitter profiles and whatever. You can kind of see like the engagement levels, and you can see who's active and who isn't. Like, for example, like with this entire rally, what I saw, like it wasn't necessarily a lot of new people coming in, but it was a lot of people that were already in this space like years ago, coming back to it, being like, holy shit, this is actually mooning. This is really nice, right? So I saw that, and then I also saw like a chart that just went straight up without having any significant pullback. So you can kind of combine those two, being like, okay, this is not ready to just go straight parabolic, right? I mean, let's say this continued on. This would have been like one of the craziest parabolas in the entire history of Bitcoin, right?
Or you just do the S&P, right?
Yeah, I mean, and then that was one of the other things that I saw was that the SPX or like S&P just straight up mooned, right? So why would new people come into the crypto space and buy our bags if they can just trade Tesla, right? And most people did that. So for me, it was just kind of like that thinking, and it made sense to me that at some point we were going to have like a big pullback. I was just not sure when it was going to come in. And I mean, this position was pretty much the perfect one to make it so, because you had like this breakout, you have enough people that are going to buy that breakout that you can sell into. And you also have
me being one of them, yeah. Dude,
yeah,
just on a tiny caveat, that shit has been so hilarious, right? Because like August was like a fantastic month, and then September, the end of August towards September, just ate shit. But like any bit of content I make now, so I'd make like a YouTube video, make a live stream, write that thread about discretionary trading, and some guy would be like, yeah, but you bought 11.9, so like what happened there? And I'm like, holy shit, do you know how many trades I've taken in all this time? It's just, it's been quite funny. I know you've had your fair share of entertainment during this rally on Twitter as well, right? With people being totally generous and
I mean, people are just, I mean, it's Twitter, right? You're always going to be judged on the last trade that you took. Because, for example, like I've been getting like people saying, yeah, you've been bearish since 6K, whatever, right? I've been hearing that like pretty much on every post I make. And then like that's kind of selective. Like you're kind of pinpointing, like you're taking one data point, right? Because if you really think about it, like the moment I got bearish, like really, really bearish was up here, right? At 20, like 17K towards 20K. That's why I started my bear crusade, right? So if you want to like nail something, I mean, you can say I've been bearish since 17K. It's not really the truth, right? I've been a couple of times bullish at 6K. I was really bullish down here. Just missed this like a good chunk of this rally, which I mean is a mistake, right? But yeah, we're not all perfect, and I'm definitely not perfect. So it is what it is, right? Sometimes you miss a trade, and it's the same thing like for you, right? I mean, this could have played out like you bought it, and it could have easily taken off to 14K, which was the next resistance, right? And then you eat shit once, and then you move on, right?
Exactly.
And you have better trades afterwards. It's just how the game. Yeah. I mean, for me, it's been working. Like the 12K short's been pretty nice.
Yeah.
But who
here's
knows?
A question. You know how it's quite regular for you to close big swings early, right?
Yeah.
And that's something just I don't know if it's a feature of your system or just like what it evolves into, but that tends to be the end consequence of that. Say we get the continuation again. We've discussed the bullish scenario, which is where anything that breaks 10-7 strongly or certainly 11 at that point, the mid 10K bearish retest scenario is just not really that tenable. I just generally think, for those wondering, like, oh, they're just talking all of this bearish crap, like, these guys are idiots, it's the first big dip, etc., etc. Like, I totally get that perspective, right? And it's something we wrote about in the newsletter, 30% corrections, etc., etc. Link in the description, go read it. But the point is, in terms of trade management, right? Mm-hmm. If you were to close early, and I know you're targeting, like, from a macro perspective, the green box sort of thing, which lands closer to 8K, right?
Yeah.
First of all, I don't think that's terribly unreasonable, just purely because this is an area of monthly resistance for the market, right? And if it fails, the green box is an area of monthly support. So on a time frame basis, it's just like a conservative, as crazy as it sounds, level to level play. Even though in percentage terms, it may not feel like it. But if you were to get kind of, where do you see yourself maybe getting some earlier warning signs to be like, okay, this isn't going to reach 8K. I should really either trim some or close this and wait for the next one. Do you have any support? I mean, below 10K, really? I mean, I know you've got 9.6, but there's like a big gap, obviously, between 9.6 and 7.8. Or is that all fluff for you?
I mean, there's some supports that you could draw if you want to. Like, for example, this one works, right? What I'm going to do in general, the moment we start, like if it actually happens, like who knows? But if it breaks below like 9.7, 9.6, I think 9.6 would be like, if we don't make it to 10.6 on this up move right now, right? And break down from here, I think 9.6 is an excellent kind of buying opportunity to take it to 10.6, because I think 10.6 is going to get tested one way or another, be it like from breaking down here and then start to squeeze like the late shorts. And then I think we'd probably either just completely reverse it or just head lower again. So that's something that I'm looking out for, like 9.6, 9.5, 9.4. What's going to happen there? Like, do I see like big buys coming in, like momentum reverse, that kind of stuff?
Yeah.
If we go straight from here, if we go to 10.6 first, I'm probably not going to be attempting to buy 9.6 because then it's just be the perfect like bearish retest.
Yeah.
And I just look maybe for 8, like 8.8. But I think like just makes more sense to kind of swing it down here. But it all depends, like, right? If we dump from here and then go sideways,
yeah,
and put in a nice wick to the downside, I'm gonna try to buy that wick to kind of get it to squeeze back up. But we'll see how it goes, right?
Yeah,
the one thing
especially
that,
on the weekly chart, it's hard to come up with all the counterfactuals and possible scenarios or whatever.
And I think the bulls don't really have like the bulls have good arguments on their side, because one thing that's been kind of bugging me out about all of this is that you have funding, or in general, like BitMEX and Bybit and all these derivative exchanges trade below spot exchanges, which usually only happens after like big down moves, right? This hasn't really been a big down move, and we've been consolidating, so should have kind of eased out a little bit at least. That just indicates that the derivatives are leaning bearish, and it usually doesn't really happen at that very rarely happens anywhere else but bottoms, right?
Yeah.
So that's one thing that I'm watching. Not really too happy about that. That's why I've been saying I think there's a good chance we go to 10.6 to kind of reverse that trend, get open interest up as well. That's another thing that I'm watching. Like, if you don't have a lot of people in position, it's really hard to kind of squeeze longs or shorts, right? Sure. So we don't really have any of that. There's no one
to be squeezed, right?
Yeah, so something that could happen, right, when you have like low open interest, or like in general, like not many people with positions, is that it just starts bleeding out, right? That's one way that this could go. That would be really, really bearish, I think. So I don't want to see that, because I actually want to get back to at least longing it at some point. Don't want to see this like just slowly bleed out, because then I think we could get another kind of capitulation event, which I don't want to see. I don't want to see any of this shit again. Oh, it's too crazy.
Sure,
like
I'm very sympathetic to that argument. Thing is, you know what? We've had the same question from two separate gentlemen. I assume gentlemen. God, I don't know what our PR team's going to do with me. But it's a very interesting one. I've got like strong-ish views on it. I think we should answer this question and jump into ETH, and I can make the case for, I mean, what the technicals, like why the title of this live stream is justified. And we're almost at 100 likes to the video. Thank you so much for hanging out with us. We very much appreciate it. So with that said, the two questions essentially are saying, everyone wants 9.6. Does it mean we either blow straight through it or never get there at all, right? And Evan, with a similar thought, CME gap is at 9.6, and everyone and their mother is looking at it. Following what you said earlier about the head and shoulders, maybe we'll get front run, right? So there's a recurring, and this is a recurring type of theme when it comes to high time frame levels or obvious structures, or basically areas that stand out on the chart. There's this inherent skepticism towards it, or towards them, by saying, well, it's too crowded, so it's either not going to work, or it's going to shoot straight through, or it'll front run. I don't know your views personally. For me, I just think you just trade what's in front of you, and you just end up playing mind games on yourself and missing really, really straightforward bread and butter trades if you're basically tinfoil hatting the chart and saying everyone's thinking this, everyone's thinking that, everyone's looking at this, everyone's looking at that. I've just never seen any instances of that thinking being terribly productive or kind of consistent in the long term. Now, it can help and provide some context, right? Like if everyone's looking for a take profit, or a certain breakout will mean something, those areas of consensus, sure. Paying attention there doesn't hurt, or at least getting comfortable with being uncomfortable at those levels, right? Knowing that there are so many eyes on those levels, either going in with a smaller size first, letting it wick a little bit, letting it maybe fail breakout, fail breakdown, whatever. But I just think overall, like for a net kind of impact on a trader's development, taking especially with high time frame levels, they're not supposed to be perfect anyway. They will wick and they will cause some difficulty before maybe settling on a high time frame close or something. But like my personal view with questions like that is, there's first of all, it doesn't really matter. Second of all, there's nothing you can really do. And thirdly, the few times that you'll be rewarded for being wiser than the crowd and like either missing the level or ignoring it because it's too crowded, etc. Every 1 or 2 times that works, maybe that'll cost you 5 or 6 good, straightforward bread and butter trades that you didn't take by following the same logic. So I think it's just a net negative impact for the most part when taken perhaps to an extreme. What are your thoughts on that?
Yeah, I agree. In general, I think when you have these kind of levels that everyone is watching, right, you can kind of abuse that. Like that fact that that there's going to be a lot of people involved. Because, for example, let's say 9.6, right? We get to 9.6, a lot of people have their bids up there. So you're almost going to, it's very likely that we're going to bounce there, right? At least short term. Mm-hmm. And if we don't, it's just going to straight up nuke like $500 to the downside, right? So the fact that that makes it easier to kind of place your stop, right? Because you want to get in the moment momentum kind of slows down to the downside. Mm. And then you don't want to have your stop like at 9.5, 9.4, 9.3, because exactly that the moment, like if you're wrong, it's going to snowball, right? So you can abuse the fact that, there's a lot of people involved there to kind of figure out, okay, there's going to be buying support there. So I'm going to buy with them. And if it doesn't work out, you don't want to be the guy that just kind of buys 9.6 and then puts their stop at 9.3. Or 9.2, because then you're going to get rolled over with the crowd, right? Yes. So I don't think you necessarily always have to kind of counter trade the crowd, because, I mean, support only works if people buy it, right?
Yes.
You're only going to get a bounce if people buy it. So by saying, okay, I'm never going to buy when people want to buy, I mean, you're going to shoot yourself in the foot, right. I think.
And even how do you even trade at that point? Do you just end up taking it full 180 where you short every support and you long every resistance because everyone else is doing the opposite? It's just taken to its logical conclusion. I think you end up in a bit of a difficult spot,
Yeah. So I agree with you there. I mean, you obviously don't want to be put in a position where you're super exposed at these kind of levels with entering with close or with too high leverage or whatever, because there's gonna be people that are over leveraged with you there. But I don't really mind getting involved at 9.6, for example. I think if you wipe that low and people get too bearish and just kind of blindly short into it because everyone keeps talking about 9.6, let's counter trade it. Mm-hmm. I could see a squeeze playing out at 9.6 easily.
Yeah. So. Especially when you get levels which almost get tested and then it reverses beforehand, and then more people with their pants down once it actually hits, given it wasn't supposed to. But also what I find hilarious, and this is again more of a casual Friday tone to it, do you ever get these fucking wild DMs which are hey, you said that 9600 is a level, and then they'll show you a trade or an entry, and they've got 90, they entered at the level, and then they're balls deep leverage, and their liquidation is just $10 or $20 away from the level, and they're and I'm what are you doing? And it's well, if that level breaks, I'm wrong, so that's where my liquidation is. I'm oh my god, that's not how it works. Especially with high time frame levels, you just need to be ready for a bit more, heat, MAE, whatever you want to call it, and just
I got to
buckle down.
I got the best example for that, right?
Go on.
If you're looking at this chart, the weekly chart, right? This support, I was this is support here, 5-1. I tweeted about it, and then people were making fun of me when it was trading at 4 whatever, right? I bought because I knew there was gonna be snowballing liquidations. I bought way below the support, assuming the support was gonna hold regardless, right? So we were trading at 3K. This was still support, which is completely ridiculous if you think about it, but that's how it works, right? So you can easily take this support, for example, could work even if we're trading down here.
Yes.
Because for some people, this is just going to be the wick, right? The difference between trading down there and that support level is just going to be the wick. So they get a better entry than they would have if they just bought the support level, and then it's still going to be the support. So, I mean, it always depends. It's for example, this kind of support wouldn't have done you any good. If you had limit orders there, You always have to know what kind of state the market is in. Is it over leveraged? Is it in kind of danger to completely roll over? That was the case in here. Yeah. I don't think that's the case right now, just based on like how it looks. But I mean, it could be wrong on that. I think right now it's kind of like the time to be patient. If you're in from higher, chill. I think anyway, like that's what I'm doing. If you're trying to get in, I mean, there's better levels to get in, and if you don't, you just get in on the long side once this move has played out, which is in general the wiser move to do. Like if you want to be a smart Bitcoin trader, you try to play the long side only, because the upside is just way higher, right? Like if you think about it, you short Bitcoin from 10 to 0, right? From 10K to 0, with like 1 Bitcoin, you make 10,000, right? And you're happy. And then you do the opposite. You long Bitcoin from $1 with like buy a Bitcoin and go to 10K. It's a very different story, right?
Sure. Those are all very good. I think the most important thing there, and this is something I still try to keep a lid on in terms of my bias, is that when you're dealing with high time frame levels, I'm sure the viewers are groaning now because they've heard me say this so much time. You need to give it space in terms of the candle structure and stuff to form at these high time frame levels, the wick. And the difference is when you're at high time frame levels, the extra kind of slack or the zone you have to give above or below that level for the wick to form is much higher than you would on like an intraday basis, right? So if you have like an intraday level of support or whatever, both from a time frame point of view and just in terms of spacing, you might only give it like, 0.5%, couple percent to do its thing at the level before you're invalidated. Whereas when you're dealing with like monthlies and weeklies, where it could potentially be a whole weeks of trading before price settles meaningfully above or below the level, sometimes, and this is going to sound really bad coming from me, if the context is appropriate, doing business at the level itself early is one of the more difficult trades, right? Because you end up getting involved at the level on like the first hit, the first strike or whatever, and then you need to stomach basically a week's worth or a day's worth or a session's worth, whatever time frame you're on, of like wick forming before you then find out whether your position is still valid or not. And that's why I try, where possible, to, if I'm trading the first test, I'll get in and out on an intraday basis. So I'll do like, my system kind of has two extremes, right? If I'm trading, I'll either trade the first test and do it on an intraday basis just to get in and out. And then I'll try to be the last person on the train if I'm doing the swing trade scenario, where I won't need to hold any kind of offside bollocks,
Yeah. I think in general, like the point that I made earlier about like your market view plays an important role in that as well, because if you're really, really bullish, right, and you have the situation where like you're trending up, whatever, and then you have like this support level, and you're really, really bullish, you're expecting the market to really, really go, right, but you're looking to get in, you're looking to get like a bigger position. Then you put your limit at the level that you want, or like even a little bit above it, and then just wait, right? And then if it dips into you, if the market is really as bullish as you assume it to be, it's going to hit that level and then straight up wick from the level, right? If you're super, super bullish, if you're like, okay, I don't know what we're going to do. I have the same level, but I could see this, like it's not been like really going and it's not that strong. Then you wait for the level to actually do something or not do anything, right? Sometimes the level just doesn't do anything and it just goes straight down. And then you look, okay, what happens like in the minutes or hours or like days going into the close, right? Are we kind of hanging around that level? Are we going to put like any kind of support in there? Play off of that. And then if you're really, really bearish or whatever, but you still know that this is support, you do the same. You wait for the close, or you wait for the close to get nearer. And then when you see, okay, there's actually people stepping in, then you can kind of say, okay, the support is actually doing its job. I'm going to close my short position or whatever. For me, that's kind of how I play it anyway. Like when I'm super bullish, I'm not going to wait for price action.
Gift, right?
Yeah, so you take the gift that is given to you. Yeah, exactly. So you have a support level, you buy that shit straight up, right? If you're not that bullish, or if the market is not that bullish, you wait for price action to kind of tell you, okay, that's interested at the level. And I mean, that's a call that you have to make on your own. Comes with experience. And that is what Kret said earlier with like screen time and whatever.
Sure.
Kind of have to judge, okay, how bullish, how bearish is the market, and then kind of act on that. And that is one of the ways how you can act on it. You have a support level, you think the market is super bullish, you bid it without knowing if there's going to be like buyers or sellers, or without any kind of interaction with the level. And if you're not, you just wait for interaction with the level.
Agreed. I think Ankit is arguing longing and shorting have the same rewards. I'm not quite convinced by that.
I mean, I can make the case if you want.
I think we should look at ETH first, and then just wrap up maybe with the long short thing.
Oh yeah, it's
given we've been going for a fair bit. So let me just bring up ETH on my stuff. I suppose let me just move a couple things around. That should be fine. You can keep your screen share. I'm just on another tab. So the same argument for ETH would essentially be around. So I think there are two areas which really matter. One is the immediate one, which is where the market is now at about 370. I'm just looking at that crazy Darth Maul candle, 2nd of August, lowest close. Don, if you're interested, comes out at 372.21 on Coinbase. So that's like where the market is right now at resistance. There's a daily break in market structure, reasonably decisively, right? Where we had this area of lows. We've got the break of the high time frame level on this candle, and then this engulfing bar, or whatever you want to call it, really broke market structure to the downside, and now we're retesting daily resistance. I don't really love these setups. I've certainly had a much harder time selling the underside of these levels than I have kind of buying their reclaim or just doing business away from them. So this isn't like an A+ sort of thing for me, but if the market's bearish, I agree with the duck here that it'll almost take any excuse at support or at resistance to play out in the high time frame direction, right? What for me matters on the weekly is the consolidation that came before this weekly BART spike, whatever thing. And there's a video on the Technical Roundup YouTube channel on is the Ethereum bull market over or something like that. And essentially dealing with this cluster, right? The range, which we had a failed breakout to the upside and then closed below it on the weekly basis, which is rough, right? That's like, those are the technicals and not great by any means. I think these are the levels anyway. Might be very close ones with slightly different closes. But for me, this is the real structure that I'll be looking to do business at if we get further rallies. So 390, bottom of the range and resistance, and this little consolidation, that green candle before the nuke on the daily lines up with that weekly level. If this gets smashed, if there's no bearish retest at 390, I think there's a really good chance of at least 412 on a level-to-level basis. And then as we discussed with Bitcoin, where the higher probability or the easier longs, whatever you want to call them are, for me, that's pretty much through 430 or anything really back above 400. But ideally the top of the range, right? So just like the duck was telling us earlier, you don't generally like when the market breaks out of a range, kind of retests it immediately, and then that retest fails. In this case, you can see we've done one step further in terms of bearishness, where not only did we fail back within the top of the range, but then we broke below the range low and have used it as resistance, right? So the bulls have their work cut out for them. For me, it's back to the weekly cluster, 390s as the low, 412 is the kind of perhaps intraday trouble area if we get strength through 390, and the kind of trend continuation play, I think, through 430, if you're willing to pay up for an entry, is more than reasonable, especially because ETH just looks so cracked out, like on the monthly and the weekly, where above this 400-ish area, there really is like an absence of resistance. In those, given that context, I'm certainly more friendly towards paying up for entries if I know there's just a bunch of dust in the way of higher targets. What do you think?
Yeah, fully agreed.
I mean, anything for ETH you want to throw at us? Screen share wise, or are you okay?
I haven't actually, like, ETH for me is a little bit harder chart wise than Bitcoin is, just based on the fact that Bitcoin is super, super clean. Like this breakout, if you look at the daily, for example, like this breakdown, it's super, super orderly, right? And then you look at ETH and you have like at least a little bit of a mess, right? But it's the same deal. Like you have, it's pretty much the same chart that we have.
Yeah.
I mean, you could mark this out as well. And then you have like confluent resistance up here. And I think the next support that we have is kind of in the top 290 to like 260
which is
area.
Monthly, weekly, any time frame you could.
Yeah. And I think that would make a lot of sense to kind of round out. Like I could even see this kind of spike, like into the 400s, get people really, really bullish, and then kind of go to 290, where people are going to be like super, super bearish, which I think is a really good support. It obviously doesn't have to play out. I don't think I'm going to short ETH, just based on the fact that one, Bitcoin is a cleaner setup for me, and two, ETH's just been way more bullish than Bitcoin has. So I don't really want to get involved, even though like if Bitcoin plays out, ETH is probably going to play out like more bearish, right? So Bitcoin's going to move down 20%, ETH's going to move down 30%. But I usually try to play the setup that is more obvious or like more clean, because what can happen is, let's say you get in a short and then you have like a little bit tighter stop loss or whatever, and then you get wicked out by some like ETH BTC does something stupid that you don't anticipate, and then you get wicked out of your trade or whatever, or you don't know, okay, is this just ETH BTC acting up? Because when ETH BTC moves, right, that obviously influences the ETH USD price, and when Bitcoin moves, it also influences the ETH USD price. So you have two things that you have to kind of keep an eye on instead of like with Bitcoin like one. So if it's not super clear, I'm just not going to touch ETH. And but I agree with your analysis. I think,
and I think, you know, as we've discussed between ourselves, daily market structure for the most part has been such a solid guide for these instruments, almost regardless of market conditions, right?
Yeah.
So if we're potentially faced with a high time frame failed breakout, like on the monthly, on the weekly, whatever, it's not unreasonable to say, okay, it could be the, you know, the dip, the trap before we mega moon, but why don't I wait if I'm going to play monthly and weekly, whatever high time frame swings, for daily market structure to at least fall into line a little bit, and then I can long with some confidence, rather than be faced with a potential high time frame failed breakout, present bearish market structure on the daily, and then I'm just going to long because I've been conditioned to whatever think in those terms. I think waiting for some, I mean, it's like a balancing act whenever you wait for alignment, right? If you wait for too long, you've just missed any reasonable entry and you end up buying like the local top. If you don't wait for it at all, well then at that point, the kind of evidence for your position is pretty, you know, hard to stomach and hard to come up with trade ideas. So that's kind of my, so yeah, if ETH breaks through your green box, that'd be a pretty decent case for at least a short-term reversal. Probably squeezes if it does that, to be honest, right? Bearish retest fail scenario. But even buying the kind of breakout of whatever mid 400s, aiming for the next high time frame level at like 530, 550, or like 700, 800, because that's what the high time frame chart sort of looks like. I don't personally see anything wrong with that. It's kind of like when 6K broke down. I get stuff right from time to time, every blue moon when Mercury's in retrograde and Saturn's rings are spinning around in the right speed and direction and stuff. I remember when 6K broke down, it was like a knife-catching competition on Twitter. Yeah. And there was this whole narrative like, oh, well, quick spike to 4.8 and then we go to 20 and like all this other crap. And I was like, well, look, why don't you just wait for the easy trade, buy back above 6? At that point, you'll have all the fuel in the world and, you know, the market will probably go mental. And that ended up being the best idea, or the better idea, even though I was in disbelief for much of it. But I think that approach could work reasonably well for where the market is right now as well.
I agree. I think, like, if you think about it, and I still like, because when you made that call, right? So for the people that don't know, we broke down here, and then Cret made the call like in here that, yeah, I mean, this could just reverse back up, or like a little bit lower down, I don't remember, but why not just wait for it to trade up here, right? The moment it goes back above there, it's gonna be confirmed bullish, right? And then, I mean, I and along with a lot of other people just started buying this shit, right? And I mean, I started buying it like, I think 4.4, so I bought like in here 4.2 like this week to the downside, bounced. I was like, fuck yeah. And then it just went lower and lower, and this is all spot, right? So I just kept buying, bought a shitload on the shakeout as well. But I mean, I was in so much stress because I was way allocated, that I honestly would have probably preferred just having bought like this breakout to the upside, even though like in this case I made more money. But I always had like this feeling of, okay, if this goes to shit, I'm gonna give like so much money back that I made during this entire run during the entire old season of 17. Because that was like a time where I didn't sleep well.
Yeah.
And instead of that, I could have just waited for 6K to break. Would have made a little less money, but didn't take on the risk of this going straight to zero, right?
For sure.
So yeah, I agree with that. With that statement. Sometimes it's good to just have the high time frame stuff and then just know where
if the market
goes.
is strong, right?
Yeah,
cool.
Exactly.
Well, I think that's the pretty smooth hour it's been on Casual Friday. Managed to get some levels analysis out, all that kind of stuff. We've, thank you for everyone who's tuned in, and 145 likes in the video. You know that my sleep schedule and quality is entirely contingent on the number of likes we get per video. So I'm going to be sleeping like a baby tonight. Thank you to all the support. To those of you who are supporting us by smashing all the buttons on the screen, thank you to Bybit for sponsoring Technical Roundup. As I said in the beginning, there's a non-intrusive, nothing too heavy promo they've got going on where you literally type in a code on a website, and as long as you trade on Bybit, you may be eligible to win a prize. So potential liquidation, redemption arc possible there. It's the first link in the description. Click on it so we get our bread and water or whatever the diet is for next month. I haven't seen the menu, duck. Moving forward, newsletter on Tuesday, link in the description. That's also free and sometimes decent, depending on what the duck tells me to write. Wink, wink. And then on Monday, you've got me. Wednesday, Friday, you know the drill. Have a safe weekend, everyone. Don't do anything too crazy, and hopefully see you on the other side on Monday. Any final notes from the duck? You're going out to party, aren't you?
Yeah, I'm going on a
Haha, me too.
farewell party actually. So it's gonna be a little bit sad, but
well.
Looking forward to it anyway. No, but thanks for coming by. Always a pleasure. Thanks for the good questions, and I guess we see each other for Cred on Monday, for me on Wednesday.
Awesome. All right. Take care, everyone.
Bye bye.
Wow, what a deep breath.